before we get you a discussion going, let me toss it across to Sonia. Sonia, we were expecting this, but 89% is resounding, and even the kind of investment that they've laid out, is it in line with what we were expecting?
Oh, this is a big vote of confidence for Maruti. As you rightly said, the deal was expected to go through, but the percentage is what's really resounding in favor of Maruti. 90% votes in favor of the Gujarat resolution. And you know what? It just proves that most shareholders believe that this structure, the Gujarat deal, will not have a negative impact on financials, on earnings, on margins, etc. And now the company can peacefully go ahead with their new plant, because you know they are facing capacity constraints, as Mr. Bhargav rightly pointed out. So this new plant will have an initial capacity of 250,000 units per annum. But let's do one thing. Let's get a couple of views going as well. We have Prakash Diwan, who's been sitting by, and he's been tracking this this story ever since the beginning. In a bit, we'll get Amit Tandon in as well. Prakash, the 2-year saga has now finally come to an end. You know, what started in Jan 2014 has now got some closure. Now that Maruti can go ahead with this plant, first, what would your reaction be? Will it make any difference to the stock at all? And secondly, how would you approach it from here?
You know, to be honest, I now feel it won't make much of a difference to the stock immediately, at least. But in the near to the long term, it could probably end up benefiting the stock, as I can make out. Of course, Mr. Bhargav is trying to placate a lot of things by a very commonsensical approach, comparing it with other products, you know, the service aspect and, you know, the continuity of the engagement with clients and all that. So I'm keeping all that aside, but looking at sheer math behind this, and it tells me that Suzuki seems to be very clear they're going to use this plant as a hub to manufacture cars, either to supply it to the domestic market or, if market conditions permit, to allow itself to sell to the other markets, which it doesn't want Maruti Suzuki to take a pie out of. You know, so it's very clear Maruti Suzuki is now a pure domestic play, and it will need to compete, and it will need to strengthen other aspects of distribution and service. So to me, it's a company that's kind of moving into a new paradigm altogether. There's nothing wrong. The reason the resounding vote has come, Sonia, is because of the kind of trust that people have that the company will not do anything which is against the benefits of the minority shareholders. And of course, the corporate governance norms that they've been espousing all this while talk highly of the management. So in all, it's a satisfactory end to a saga which was quite, to begin with, it was quite, you know, contentious. But overall, I think it will end up benefiting the stock in the long term.
All right, so it will end up benefiting the stock in the long term. But, you know, just come in on this, Prakash, because will there be any sort of margin contraction? We know that Maruti will operate the Gujarat plant as its own entity, in the sense that, you know, Suzuki will make no profit or loss, will sell to Maruti at a cost basis, etc. But given that the plant is new, the depreciation could be higher, there is a ramp up expected. In the near term, do you expect any margin impact on Maruti?
Well, very valid, you know, area of thought again. I'll tell you, compare this with the oil marketing and oil refining business. Now, most of, you know, the industry, most industries go through this kind of a shift, Sonia, at some stage. Now, 4 years back, when oil was much higher in terms of cost and the refining margins were, you know, kind of plateauing off, all refiners started marketing themselves, whether it was BP, IOCL, HPCL, by setting up their own, you know, outlets, which was called company-owned, company-operated outlets. Maruti is going to start doing that with the cash that it has saved by not investing into the plant. Of course, it would not have invested such a huge amount in the first place. The expectation was it probably had earmarked about 8,000 to 9,000 crores. Now, if that were to be put into the distribution side of the business, you start making margins as a distributor and a seller, reseller of the cars rather than a manufacturer. So I think the margin contraction will not impact the overall P&L, because the margins will start coming in a different form. So you would have manufacturing from the existing units, and you will have newer models which will get introduced from this at a much rapid pace and a much better scale, with probably better, higher quality as well. Because that's where Maruti is kind of struggling to keep itself abreast with the Germans, with the other players in the market, which have started upping the quality levels. So if Maruti has to sell through a larger distribution network which it owns and not franchised, I think the margins will be intact.
All right, we'll come to you in a bit, Prakash. We have another guest who joins in. In fact, it's interesting. Amit Tandon, the founder and managing director of IIAS, is also with us. And IIAS was one of the few proxy firms who recommended shareholders vote against this deal. Amit, hi, good evening. Thanks for joining us. Now that the voters have resoundingly voted in favor of this deal, what's the sense you're getting from here? There were fears that Maruti will eventually become a trading company, that, this deal is not in favor of shareholders. Have all those fears been allayed?
Look, at the end of the day, while the investors have voted, and very clearly it's Suzuki which is going to set up the Gujarat facility and not Maruti, as we would have liked to. Nonetheless, it's quite interesting, and the way we see it is, it's been a fairly long journey. Maruti made the first announcement in January of 2014. And we are now in December 2015, so it's almost a full 2 years before they actually came or approached the shareholders to ask them to vote. In this intervening period, they did some soul searching. They went, met investors, understood what their concerns were, laid some of the specifics. Now, if you look at the transaction from what it was envisaged at the time of the first announcement to what it is today, we're kind of seeing something very significantly different. But nonetheless, our view at this moment is, as I mentioned, we maintain our stance. But having said so, we do realize that there are some benefits which have come out of this transaction as far as minority investors are concerned. That is specifically with regard to Maruti. If we were to look at the big picture, I think most of the boardrooms have taken notice of the fact that you can no longer take shareholders in India for granted. They are a part of the decision-making process. Admittedly, on most of the operating decisions, they might leave it to the management to do so, but when there is a strategic shift which is taking place, as it is in this case, their view is that, look, we need to be consulted, we need to be a part of that whole decision-making process. So I think that is, from our perspective, quite a welcome development from the domestic market's perspective.
All right, so welcome development now from the domestic markets perspective. But Prakash, come in on this. Are there any fears left, or has Maruti allayed most of the fears? We were just talking about how it could be EBITDA margin dilutive only to the extent of the depreciation of the Gujarat plant that Suzuki will take back. So in a sense, there won't be any impact on margins. But any other fears that, there was a long list of fears when the proposal initially came out, but have all of those been allayed?
No, I think the only thing that remains unanswered, and I'm sure the management has answers and will articulate as we go along, is what do they do with the cash that they end up saving? And as your colleague was asking, Mr. Bhargav, whether the treasury income of 8% or whatever you can generate on a safe side, is it going to be good enough to replace the long-term averages on the ROC? But the fear is that if that money gets splurged in setting up, let's say a Nexa kind of a showroom chain, and that doesn't get utilized in terms of asset turnovers, then it becomes an issue, because that means that you have sunk in money into things which are fixed costs, which will take much longer to pay back. So that's exactly where, the EBITDA could start getting under a little bit of a pressure. So depending on the plan of phasing out or expanding these network, this branch network is where, the dealership network is where we need to see, and how much is Maruti going to own out of that. So that's a good, area of concern which we need to kind of seek answers to. If that is in place, I don't see any other fears that seem to be impending anymore.
Okay, so